Hey everybody, this is Ron Avalis. I'm a Forex trader and founder of Chart Junkies. Um, what I want to do today is just a quick video lesson on the Gartley pattern, how to identify it, and how to add it to your trading arsenal to help you leverage your trading in the markets. And if you want history or background or want to know the origins of the Gartley pattern, all of that's going to be posted on my website, chartjunkiesblog.wordpress.com. But just for the sake of time, I'm going to go ahead and dive right in. So let's pull this over here. The Gartley pattern works in an if-then syntax. So if the market does this, then we do this. So if we have an impulse leg, which is the first rule. Oh, get my spelling under control. So if we have an impulse leg, what is an impulse leg? It's a very obvious movement, or an obvious move rather, to the upside or the downside. So you don't want a lot of noise. We just want a very clear move up or move down. So let's draw that here. Just for the sake of this lesson, we're going to use a bullish move. Just going to make this a bullish Gartley pattern. So there's our impulse leg. Now this impulse leg is going to be labeled X to A. So the start point is your X. The ending point for your impulse leg is your A. And that brings us to the second rule of the Gartley pattern. So if it retraces to the 61.8% retracement but does not touch the 78.6% retracement, then it's still a valid Gartley pattern. So we want to touch the 61.8 but do not want to touch the 78.6. So let's bring out our Fibonacci retracement and start from X and go to A. So we want it somewhere here in this zone. So if the market retraces back down into this zone but doesn't touch the 78.6, then it's still a valid Gartley pattern. Awesome. So let me go ahead and delete this here. We'll go ahead and label this B. So we've got our X to A down to B. And now what's next? What is for our C point? Well, again, we want a 61.8% retracement of the A to B move. Oh, get my spelling under control here. Okay, but do not want to touch the 88.6% level. So let's go grab our Fibonacci retracement, and we want a retracement of A to B. So we want to come and retrace back up into the 61.8%, but do not want to touch the 88.6. So let's go grab our retracement tool, and we'll go A to B, and we want this to retrace somewhere past the 61.8, but do not want to touch the 88.6. So we'll go ahead and plot it just right here, and that is still a valid Gartley pattern. So now that's our C point. Go ahead and label it. Okay, now where's our D point? Where are we going to enter the market? Well, our entry, or D, will be a 127.2% extension of A to B. So what does that mean? That means we're going to take a Fibonacci extension from A to B, and we want to extend it by 127.2%, which should be somewhere around here. and that will be our entry. So let's go grab our extension tool. We'll go from A to B, back to A, and here is our entry. We'll go ahead and grab the D right here. And we'll fill in our pattern. So we've got X to A to B, 61.8% retracement. B to C, again, is 61.8% retracement. And then our D is a 127.2% extension. Okay, now which way do we enter the market? Bullish or bearish? Well, you want to enter the same direction as your impulse leg. So our impulse leg was bullish, so here we'll want to be bullish. Okay, now let's talk about stop losses. Now, stop losses are different for every trader. I just use 10 pips below the X point. Some people like to use structure, some people use 20 pips, 15 pips. It's totally up to you. Back test and see what works for you. But for me, I use 10 pips below X. Target. Where is your profit target? Well, your profit target should be, a 38.2% retracement of A to D. So what does that mean? Here's A, here's D. We want the target to be a 38.2% retracement of this move, this entire move down. So let's go grab our Fibonacci retracement tool and set our target. And our target's going to be right here. Our entry's right here. And our stop loss is 10 pips below X, right at 83.01, so we want to be at 82.91. And there is our Gartley pattern. So while I draw this risk reward out, let's say you're doing a bearish Gartley pattern, so the impulse leg is down. Everything is exactly the same. You still want the same retracement up by 61.8. Don't want to touch the 78.6. Same retracement back down for that B leg. Same rules, it's just inverted. Just flip this 180 degrees, rotate it. But yes, same exact rules, same target, same stop loss. Anyways, so let's go look at one of these in the actual market. Let me pull over the Euro and Japanese yen chart. This is the 4-hour chart. And let's see if we can find something. So we see the market has a nice move up, it comes back down here, it comes up and then retraces back down. And this looks like a pretty smooth impulse leg. So after an impulse leg, what are we looking for? Do you remember? 61.8% retracement, but does not touch the 78.6. So impulse leg, check. Now let's check for this. So let's go grab our Fibonacci retracement tool. Start from this impulse leg up. So here's our X, here's our A, here's the 61.8. Boom, you see we touch it, but we don't touch the 78.6. So far we have a valid X, A, and B. So X to A to B. Now what are we looking for? Well, we're looking for if the market goes to 61.8% retracement of A to B, but does not touch the 886, then it's still valid. So let's look for that. So we're going to bring a retracement tool back out from here, or A to B, and we're looking for it to touch this 61.8, but not to touch this 88.6. And you see it's already touched the 61.8. Now let's wait for it to roll over. There you see it's starting to go back down. So that's perfect. Let me get this Fibonacci tool out of the way. There we go. All right, so now where's our target? Where's our entry point, excuse me? 127.2% extension of A to B. So X to A to B to C. So we want to extend this move, so let's go grab our extension tool. I'm going to go A to B, back up to A. Here's our entry, 127.2. We'll go ahead and draw that in. Okay. I'll leave that there. Actually, we'll put a horizontal line there at our entry. Stop loss 10 pips below this, 120.42. So we're going to be at 120.32. Targets. Where is target? 38.2% retracement of A, B, C, D. A to D. So let's go get our targets out. And you guys may be thinking this is a lot, but you're going to start to just naturally see these moves when you look at the market, and it's going to become easier and easier and easier. So just keep practicing. But this is a really awesome tool. And you can backtest and see how profitable this pattern is. Anyways, let me get this out of the way here. We'll just go ahead and clear this one too. So here's our entry. We're going to wait for the market to hit this point. If it goes below, we'll get stopped out here, and here's our first profit target. And remember, we want to buy because our impulse leg was bullish. So here we're going to go bullish as well. All right, so let's roll forward and see what happens. Boom. So here's our entry, touches our line, and now we're waiting for that profit target or our stop loss. Let's roll forward. Boom. And we made some money. Let's see how much money we would have made on this trade. 86 pips. So 86 pips on this quick, painless trade. Super easy. Anyways, guys, so if I went too fast, I'm sorry. Pull out a notepad, pull out a pencil, pause the video, write the rules down, go back through the market, look for these. You can just rewind the video and rewatch it. Also, make sure you check out the website. We've got a lot of free education on here. It's chartjunkiesblog.wordpress.com. And you can actually just go here to the education tab and get a lot of free education. I also post almost daily market analysis. Actually, with this most recent trade, we made a little over 100 pips. And I update you guys on these trades daily as well. You can also sign up for our mailing list, and you'll get all these trade alerts sent right to your inbox every day. We call it the market preview, the daily market preview, and that'll get sent right to you. Totally free, guys. Totally free education. Lots of good tools here. But anyways, that's it for now. So just remember to plan your trade your plan, and happy trading, guys.